G'day folks, Jim here from FX Charts, Wednesday the 15th of January. Thanks for tuning in. Well, today's focus really was on the US retail sales. They were somewhat mixed. The December number came out at 0.2%, which was actually an improvement on the expectations of a 0.1% rise. But the November number was downgraded somewhat, so the outlook was mixed. And consequently, the dollar was a little bit mixed as well. The euro made some gains, some mild gains, and held them, partly due to some earlier comments from one of the ECB board members, Nowotny, who made some reasonably hawkish comments about growth in the EU and the potential for it to be revised upwards from its current 1.1% projection. But overall, the dollar was reasonably mixed, as I say. Dollar yen went higher. The yen and the Aussie both weakened. And sterling had a choppy session, but it's ended up a little bit higher. So we're going to have a look at the charts. And as you can see from the euro, this is a 1 hour euro chart, hasn't really done an awful lot. It did get up to 137. There's good sellers up there, and it's currently trading pretty much where it's been for the last, really pivot where it's been for the last day or so. And it's sitting right on this FIBO level here. Now, if we can break 137, then we might be heading up to this 137.20 area. There's reputedly some pretty good selling interest above 137, so I'm not really sure we're going to get there. The hourly charts are flat, not really showing us much either way. If we go further out, 4 hourly charts look as though they might have some very mild momentum, but they're not really all that interesting. And the dailies, once again, they're flat. So I think there's probably better things to look at than the euro. If we do fail at 137, then I think we're probably heading back really down towards this sort of 130 with the immediate support here is about 136.30, that FIBO level. But if we head below there, sort of that 130, 136, 135.80 area. And if we head below there, we're coming back to the 100-day moving average at around 135.5. That looks some way off today, but I do think that's possibly what might happen over the next couple of days. Dollar yen. Dollar yen, as we can see, having had the sell-off, it's recovered well. I think I mentioned this trend line yesterday that we were breaking at the time. We haven't really looked back, and we're trading just below the session highs of 104.25. The short term, this is just a 30-minute chart, but they're becoming a little bit overbought now. The hourlies still remain positive. We've got the 200-hour moving average right up ahead here at 104.38. So I'm not really convinced either way. The 4 hourly charts do remain positive, and we may yet go back up to 104.5, 104.75. But the dailies do remain negative, so I tend to think that any near-term rally is probably a sell opportunity. But ultimately, we're probably fairly range-bound with good support down here at sort of the 102.85, 103 area, and good resistance, I think, above 104.5. So probably trade that range for the next day or so without really looking to go anywhere. There's not an awful lot of data out to drive it today, at least, and so I think we'll probably just chop around rather aimlessly. Sterling has recovered, got down to this 163.5 area. We're below 163.40 actually, I think it was, and it's recovered back up to a high of 164.63. It's just chopping around now. The hourly charts, they have headed higher. They look as though they might be running out of a bit of momentum. The 4 hour charts, having been heading lower, they've turned mildly higher. But I think while the euro to me looks as though it's going nowhere, I think sterling probably is rather bound really as well. And I think I'd be surprised to see it get much above 164.80. But at the same time, I don't think we're going back below this or 163.70, 80 area either. So I think really on the day, just trade the range. And the dailies still have a mild negative tone, so maybe selling rallies up towards the top end here. If we got back above 165 sort of 20 area, then I'd change my tune a little bit, I think, and we're probably headed back higher towards the previous 166 top, but I don't think that's going to happen for the time being. Dollar Swiss been pretty uninteresting. It is trying to break above this short-term resistance at the moment. Having been down, it's held 90 in the recent move down, and below there it held that 89-85 area. So I think we're probably in for more of the same. I doubt we're going above 90.50. We've got this resistance here, the Fibo level here, and also the 100 and the 200-hour moving averages are crossing here. So I think 90.50 is probably toppish on the day. Probably not going back much under 90 either. So, and once again, as with the euro, while that stays fairly steady, I don't think we can expect too much. The 4-hour charts look as though they're turning mildly higher. And so while this trend line support holds, it's down around 90, as I say. I don't see too much in it. The dailies are pretty flat. So once again, I think probably a range bound day, trading but really between 90 and 90.5 is what we should expect. If we break either side, then I think 89.85 will hold the downside and 90.70 the top side. The Aussie's been interesting. Caught me out a little bit really. I thought that 90.30 area might hold it, but it's failed pretty abysmally. We're back down around the lows here at 89.50. The 4-hour charts they really topped out. They looked okay up here, but they've topped out badly and failed. Now we've got not an awful lot today, but we have got the unemployment data tomorrow, and I would until then I think probably we just knock around between 89. I don't think we see 89, probably 89.20 and 90 cents on the top side. We're probably not even going to go that high, maybe 89.80. We've got the jobs numbers tomorrow, which will give us a bit of a clue as to what we might expect from the RBA going forward. Further out on the dailies, they're still reasonably supportive, although they're getting back into neutral territory. And I think possibly we might just continue to unwind. So it looks to me as though we're not got an awful lot. We've got some housing data out today and Chinese foreign direct investment data later on. So that might provide some volatility. But just in the short term, I don't think we're really going anywhere too far. And having moved up and then come reverse it all, we might just see some consolidation, as I say, ahead of the unemployment numbers tomorrow. The Kiwi, well, the Kiwi had a good run higher to 84.25. It has come back a little bit, bought a little bit lower by the Aussie, but Aussie Kiwi in itself has had a big run, and that's moved back down to below 107, and it looks in danger of taking out the 2009 low, which was down around 106.35, I think it was. So keep an eye on that. But the Kiwi itself, it looks heavy in the short term, but and also on the 4-hour charts, I don't think we're going to take out the overnight high, which was at the Fibo resistance level, 76.4% Fibo resistance level of this move down. The dailies, though, they're still in positive territory. They still look okay to me. And if in the next couple of days we can take out this level, then we could move back up to sort of 84.75, 84.80. I think it's going to be fairly choppy today, and it could well be driven largely by moves in the Aussie and the yen as the Kiwi gets pulled around along the crosses. I think in the short term, probably look for 83.5 to support the base, while 84 to 84.25, I certainly don't think we're going above there today. So all really rather an uninspiring session, I think, ahead. Everything's looking a little bit tricky. The crosses are pulling things around. Nothing's particularly clear to me at the moment. So I think a fairly prudent trading position is required. Remain flexible and nimble, and really just trade the short-term ranges. I wouldn't be taking any medium-term positions here at the moment. Nothing looks particularly clear. There's not an awful lot of data out today. We've got the ECB monthly report tomorrow, and also the the Aussie jobs data will be the highlights. But the main thing to keep an eye out for, I think, also is the Fed board members speaking, who seem to be pretty closely aligned in talking down last Friday's non-farm payroll number, suggesting it's a bit of a blip and that economic growth in the US looks reasonably healthy, and that going forward we should probably expect tapering to continue, as it's already started doing so. So that's about it for today. Sorry, not a very inspiring update, but we'll talk to you again tomorrow. And in the meantime, good luck with your trading today. Cheers.